General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, let's knock out the chart work. So it is January. It's the middle of the month. Let's see where we at. Let's go to forecast. This monthly range is still kind of holding us. I don't feel like we have an anchor point for the month yet. Do I feel like this is the low for the month? It could be. Where's that? Visibility 4 hours. It's also previous week's low. We'll put this only on this interview. This was the NFP week, which is interesting. This isn't officially traded range, so the only levels I'm looking at is the high and low. No, I don't feel like this is the anchor point of the month, because I feel like we're gonna sweep December's high and low. I don't feel like December is safe. So let's go back here. I don't think Going into, I think we're still bullish. We don't have no reason to flip by just yet. And lock this, lock this. Trouble. December start. And lock that as well. Still bullish. Market. No shifting framework hit right. Price has been low volume. We have not left December range just yet. I had 2 case studies, 1 high quality and 1 mistake. For the month itself, on the case studies so far I've been seeing this choppy condition is the reliability. Daily profiles. Time frame context review. Did the monthly deliver the bias I set at the monthly open? No, we've been chopping. Been chopping so far, which is normal for coming off Christmas. New Year's. Time and bias alignment for the month. Let's see. Thinking late month expansion. Since options expiry and CPI fall on the same week, I can see bigger week 3 and week 4 going into February. Expansion mitigation signals. So far, we haven't had an expansion in this monthly candle yet. We haven't even took 2 weeks. Like the big liquidity pool here is because we got 2 previous weeks highs, but we really don't have no expansion. Week 1 and week 2 did not expand. Decision quality, high probability versus low probability. Expect a low probability environment since volume is low. market accuracy forecast at monthly open versus what printed why. What you read wrong or right for the monthly or the weekly. I was right to predict choppy conditions. What I read wrong was thinking in these choppy conditions. Thinking in these choppy conditions, we would get better liquidity grabs. But we have been leaving engineer lows and displacing in the direction for the flow. Experience success or failure tag. It's up +1 experience month. Taking Q1 slow. Want to build and save up to put on bigger swing trades towards the end of the year. Case study vol reference. 2-week new. Nah, we ain't got nothing like that because it's really just been chopped. December didn't do anything like it did last year. November was the truth. 1, 2, 3, 4. November was the truth. Week take a low, week take a low, week take a low, week take a high. High, low, low. Take out a weekly level. Price just does nothing for the first 2 weeks of the year. Just and let's get the screenshot of the monthly. This week is super dynamic too. Like, move this. Very, very interesting. Probably should have made it a little bit bigger so you could see how we just stuck here. Yeah, this is a better picture. Week 1, week 2, December high, December low. We really don't have any inefficiencies in December either. Here's the 2026 open price. It's going to be important. Right here, January 1st. Open price. Mm, something peaceful looking. Okay, that'll work. It's perfect. Will we close above or below this price? Thinking above. All right, yep, that's better. It's better. Screenshot. If we take out a weekly level, price just does nothing. Purge and revert. Mm, still think December high and low. It's unfinished business. And will be ran. Will be ran. December. Okay. I did this. It's gonna be week 3, January 12th through the 16th. Higher in December slides. Yen pulls back. What did it say? Dow adds 207 points as traded rotate out of tech. Okay, kind of makes sense. That's what we kind of been seeing too. And then it should be CPI. There we go. Go like this. So get a better picture. Monday through Friday. Like this. Mm-hmm. CPI Tuesday. I think it's been such a long time since we really had the CPI. I think this is the main event for the week. CCOT. Finally. Mm, I be forgetting about Bitcoin is on the CME being manipulated. The words of ICT. I'm just glad we got caught though. NASDAQ. Okay, so what stands out? Commercials on the short side. And it looks like, and they control the open interest. Short open interest. Hmm. It's a yeah, the number of traders, but that don't tell you how much money they put up. No, the change in open interest. You see commercials are getting out of shorts or getting out of long positions and adding to short positions. Hold on. Post it. One day I'm gonna type slower or just have it type it, not just talk. Scores cannot long positions. Boom, boom, boom. Oh, let me do this for see what Larry Williams AI thing I may say is for. Let me post this. See what it says. Net positions, net 10,000 bearish. Non-commercials, net bullish. Non-reportable, net bearish. Total short, who in the picture is net bearish. Large speculators are bullish. Commercials and small traders are bearish. Active traders. Active commercial net minus 10. Yeah. What kind of price behavior should I expect from this position? Consolidation, breakout, or reversal? Based on Larry Williams' principles, commercial heavy short, and historically they are right at turning points. Yeah, this is stuff I know. Potential price top forming, followed by reversal or correction, especially if large specs increase further. and commercial stay short. Not likely a breakout, more likely reversal due to commercial stance. Yes, commercials are spring net short an important Wilco signal. How do current competitions with large speculators versus small traders compare to commercials? Do they signal immediate market bias or opportunity? Class is set up for a market top. Stay looking for short entry, protective hedge, and NASDAQ link interest. Would you pair with commercials? Take peak late January to early February. This often starts mid-February and lasts through March. So we'll put this here on the Notion. Let's think ES. Or S&P 500. CFTC. I like Solano. Okay. Let me screenshot this. It is 10/6. So this is from Thursday, Tuesday. This is interesting because this is super different. Okay. So commercials are adding shorts and longs over here. But over here, they're taking off longs and adding shorts. They finna dump NASDAQ. That's mad weird. And look at the open interest. They got all the open interest over here too. Mm. Okay, let me put the notes here. So, first thing that sticks out is commercial have open interest majority on long and short positions. Okay. They added more long and short positions. Okay. That is a big deal. All right, so let's put that's a major stick out. So where's the thing? All right. This is the S&P 500 COT. Commercials are bearish. Non-commercials are bearish. Small traders are bullish. Calculate latest position. Okay. Same results. Bearish buys from the major players. Commercials are short, small traders long. Markets are usually overextended. Large specs are significantly net short, which aligns with risk off hedging. Okay. A pullback from correction, not a breakout. Okay. Net short by 27,000 is moderate. Not an extreme, but aligned bearishly with large specs. Okay. So they saying it's not a big deal, but bearish bias is building. January to February tends to be strong due to January effect and fresh funds inflows. But often late January to March, we see consolidation and reversal. Okay. Okay. Let's do it like this. Okay. Okay. So since using NASDAQ and the S&P 500 COT report, which one would you say would be the better one to trade and why? Also, why does why does NASDAQ, they are, I guess the word would be taking profits on loans because they're not adding them? Yeah, taking profits on loans. They are not adding commercials, but they are adding in SPY. What could this mean? Ask good questions, you get answers. Let's see what's up. Okay, side by side. Boom, boom, boom. Bearish, decrease loans, adding loans. Net bullish, net bearish. Reversal likely, taking profits, de-risking, stepping in, accumulating. So NASDAQ. Okay, NASDAQ commercial reducing long exposures, commercials cut. 41 long contracts. They're taking profits, not adding. Still crowded and vulnerable. And backing off, they say, we got what we wanted. Now let the specs hold the bag. NASDAQ is cleaner for the short. We'll just put this in the thing. So if you're looking for buys, it'd be S&P. But if you're looking for sales, it'll be NASDAQ. All right, this page is getting too long. Let me minimize some of this. Good open. COT's down. Let's do Fed watch. Yeah, they're not cutting January. Are they looking for cuts then? We don't even have a cut on the table for March. No red cut on the table for March yet. I think sentiment starts to shift back to rate cuts. It's gonna be time to look for swing trades. Options, just so not futures. Earnings. I think they still determining the earnings. Yeah, nothing significant this week. I think the earnings come up after this week. Hold on, wait. That was the wrong week. What about after that? Okay, January 20th is Netflix. Intel. Okay. Next big earning is January 20th, Netflix. Okay. Let's see what the sentiment survey looking like. Super bullish sentiment. A slight change and cash on the side. Went down and bearishness went up. Bearishness went up. The bullish push up feels like a turtle soup conceptually. 9 weeks of days. So let's knock out these charts. So that's that. Yeah, we'll move all this stuff. Yeah, we'll move it. Let's get some fresh charts, and then let's get SPY. And I'm gonna use the Forex charts on the contracts. I just have separate charts for the contracts, but it's more peaceful for me like that. SPY, do the big boy time frames. I used to have. I need to remake my PD array matrix poster. Because that is the truth. Tenth, 26. It's gonna be for years. Thank you. In this order, let's see what we got. Monthly, what's going on? say monthly's bullish, but I think the most important note for the monthly would be in this range. What is this? October? The range of October we've been stuck in. This is all-time high. And just say created in October. And this is just October low. Institutional order flow is bullish though. And our next premium array, it's really previous month's high, previous month's low, but the real premium array is all-time high, and our discount array is October low. Go to the weekly. See this? Hold on. What I just did with that? This will be a new week opening gap here. Premium array. It has never been touched. Let's lock this. Make sure I'm locking this stuff too. Okay, I already did. Discount array. This is balanced downside. This is balanced. This still doesn't have a down candle. Pushed up, pushed down, pushed up. Yeah, you gotta watch this. There's also a new week opening gap here, but we really don't need to add that. So weekly order flow, we're bullish. We have a weekly volume imbalance to the upside. It's an inefficiency to the downside. Let's go to the daily. We finally broke this accumulation on the weekly. Right here, we still in it, but these ranges are interesting. Here we have this. This is the weekly range that we've been stuck inside for 1, 2, 3, 4 weeks, which is really this monthly range. But for the sake of, we swept this and we're still here. lines. Like this. So now when I go to the daily, let's see. So this is where most of the price action's been at. So I'm really not interested in nothing in here. This low is a weak low. It's also a previous month's low. It's already a array there, so I don't need to add that. We add for the daily, we're bullish. It's our next premium array on the daily. Be this order block. Where's our next bullish premium array? You can say this would be our bullish order block. It produced a swing that broke structure. It just broke structure ugly. I don't like this low for this order block. To me, that's a weak low. It needs to get dealt with. And I also don't like how we have a gap here. We closed here and opened here. It's an inefficiency. Let me make this right bucks. We'll lock this. Okay, cool. Array, we got a severe short block, discount array. Let's daily volume imbalance, H4. That gap right here. Unlock and lock. H4 is not giving me no clarity. Looks messy. Nothing standing out. We're still bullish. Our next premium rate is accounted for, weekly range high, so we don't need to put nothing there. Our next discount array is accounted for, we don't need nothing there. H1. We failed to take this high. It's a bearish sign. I would look for where price will reaccumulate. You could get a bounce here to target higher. Anything lower, I'll kind of be hands off. Selling above the high makes sense. Here's our bullish breaker. Get these last 3 candles. I was looking at this one. What's this? Friday? But I didn't get it. I still be watching this area though. Just because breakers confirm changes in state of deliveries. So if we close below and we retest it and use it, then that confirms the smart money reversal. ICT core content stuff. And that'll be all I watch for here. Old highs, old lows, this breaker. We don't have no mitigation block. This bullish breakers next. Then after that is liquidity void. You got us a bag here. Keep an eye on that. You can lock this. Change this to green. So not to be confused. And lock this. Okay, it's already locked. Cool. Bearish stuff is up here. Where's price? We're kind of at the last bullish mitigation block right now. But really it's a break because we broke structure here. So closing above this area, it's like confirmed that we're going higher. No liquidity voids. All right, that's it for the matrix. For the journal, I need 9 weeks of days. I need to switch the low resistance liquidity run stuff to 25%, but it's gonna just be bullish. I think we ran this 25% too. We really only need 25% of that trend line to destroy it and keep moving, is what I've been noticing. Phantom trend line liquidity. Bam. And here's the daily. Okay. Who knows? Price closing above 5. No. Be looking for a turnaround. It seems commercials are getting out of long positions. Where is our anchor point for here? Our latest anchor point? Well, this hasn't broken anything. This swing hasn't broken anything. This swing swept this and we closed above it. Let me put 2026 back on here too. It was a bullish day. Nope. Okay. So far, the only real anchor that we have that broke structure is all-time high. Mm, and then this one is confirmed. This one here. Anchor. Circle. Oh, I think I have one for the daily. It's a different color. Perfect. So this low created this high that took out this. We retraced and we're pushing. So this is our anchor right now, which is the November low. Just for giggles. Yep, that was a 50% retracement. Alright, so November low, created a swing, approach structure, and retraced 50%. Anchor confirmed. Hold up. Just two weeks. Oh wow, it actually worked. Good time. Story to price alignment. Um, lots of drama, but the storyline right now is like war. Government about to shut down again. Which is interesting because you see, I just had it working and it just stopped just like that. I ain't even hit no button. Lots of drama, but the storyline right now is war, government about to shut down again, and midterm elections. We always engage in. Do need to be better with shot selection now. Let's do SPX. Okay. It's crazy bullish. Next premium raise gonna be 7,000. I'm sure it's probably already hit. Alright, so blown and lock it. What's our discount rate? Really, it's gonna be just this down candle, open price. November open price. Well, we really can't call it an order block. It is interesting just because it's a down candle. Premium raise 7K. November open price. See what the week is doing. Hmm. I'm gonna need some projections here. Here to here. This right here is probably to the tick. So that means our next is here. 54.8. Copy. Lock this. And here we do have a previous week's low. That's interesting. I think it's interesting just because it's a down candle and it should support price. You can say this is a potential weekly order block. Or just say weekly OB candidate and see if it gets selected. We'll make it green too. And lock this. Alright, so premium discount, we bullish still. Premium array 7054. Hey, discount array, weekly OB candidate. OBC. Let's go to the daily. Let's get this 9 weeks of days too. 6, 9 is here. Alright, we here. We got us 2 targets. We ain't just gonna put a whole bunch of lines up there. You have to respect the all-time high. We not leaving any gaps. Weakness is time we can go. This is just internal range liquidity here. I wouldn't say it's a major structural low. Closing below here would mean more to me. This is a 3-bar swing low. Also, what's interesting too is this large candle. Where's this? 50%. I would look at this as the order block. And it's internal range liquidity before it too. And lock this. Turn it on and lock this. Cool. All right. So daily bullish. Next premium array, not applicable. Next discount array. Internal change liquidity plus OB. Go to the H4 chart. Look how this fits so perfect. Like reclaim order block, zoom vibes. We're bullish here too. There's nothing above us. You could just eyeball 50%. Something should be up in there, but no sense in overdrawing it. I don't trust this. This order block didn't create a swing with a gap or anything. So I don't see nothing here that stands out. There's nothing to the left. Okay, makes it easy. Discount array, not applicable. Let's go to the hour chart. There's nothing above us, so now let's see. So our first little breaker, we can see if it holds. Let's go. Yeah, middle orange. No voice. I really don't see too many gaps. We kind of got a rejection plot. Okay. Solid ray matrix. Let's get the 9 weeks of days. Put my anchor here too. Daily anchor. What in the world is that? Hold on, wait, just do this. Because I could have swore I had daily anchor. Okay, I didn't. We don't need all of this. Oh, that's the quarter open price. The open price of last quarter. It's an indicator. You put 2026 open price. We opened here. Six open price lock. Notes. Price is bullish. And remember, commercials are adding loans and engine short over here. Anchor point interaction. Remember below. Anchor here as well. Store the price alignment. Seems tech is slowing down. Industrials picking up. So SPY is leading. Industrials is Ward too. That's our industry. It's crazy, huh? set up confident plan, we can engage. And I don't have a Forex asset. So last year I watched Euro, Silver, and NASDAQ. It's like three different markets. So now it's SPY and NASDAQ so far. The max is gonna be 3, but I'm thinking 2 now. That's actually not bad too, because I get to study the difference of how they behave based on COT. So that's cool. Something new to learn about the markets. Our skill focus will be strong liquidity. Our journal intent, finding fair value. Case done, honey. Daily profile. Daily profile. Study. You can be aggressive this week. Is options expire week. Plan strike day Tuesday. CPI's on Tuesday. It should set the tone. All right, that's that on that. Y'all have a good day.